As a property investor, it is extremely important to identify the right market to invest in at the right time. Now, this can be one of the most challenging parts of your investment journey, but can completely change your life in the future. So in today's video, myself and Ben are going to go through exactly how you can identify the right market to invest in whilst incorporating that timing as well. Now, the reality of the world is, unfortunately, nobody can predict the future. Nobody knows what's going to come next. So what we're forced to do as investors is look back in history to analyze how certain markets have performed so we can identify where we should be investing. Now, one of the coolest things that we found a few years ago was an article that was done by CoreLogic where they looked at the 7 capital cities in Australia and compared them with the 7 largest regional markets in Australia. So they did a study on metro versus regional. Now, what was found from this is that the metro markets had outperformed those regional markets by 85% over the last 20 years, which is massive. So it helps us figure out where we should be allocating our funds.
And then once we get past that and we get to these 7 capital cities as a focus, for example, if you're looking to select the right market, you might as well choose the one that's done the best historically. Within those markets around Australia, we know that Sydney, Melbourne, Brisbane and Perth have all averaged more or somewhere between 9 and 9.7% per year over the last 50 years, according to the Homely data. So again, instead of having 7 capital cities to focus on, it means we've really got a Sydney and a Melbourne box and then a Brisbane and a Perth box.
And it really helps you understand this from the fundamentals of property investing. Now, some of the things that are going to put pressure on property prices is population growth, infrastructure growth, and job growth. And these markets around Australia secure the most of that. But I really like the look of some of the regional markets surrounding these big cities as well. You know, you've got Geelong down south of Melbourne, you've got Wollongong and Newcastle just outside of Sydney, and then the Gold Coast and the Sunshine Coast. Now, all of these areas are sort of within 100, 150 kilometres of the major metro markets, and they present amazing lifestyle factors that a lot of Australians want. So I'm totally cool with investing in these major regional hubs, and I have done so up here on the Sunshine Coast myself.
I completely agree, man. Like, I've done really well out the Central Coast. I've seen Wollongong blow up where we used to grow up. I've seen the Sunshine Coast and Gold Coast and Geelong all almost double in the last 10 years, in line with Sydney and Melbourne as well. So then we get to the point where we've got to at some point recognise that, like Australia isn't one city, you know, Sydney, Melbourne, Brisbane, Perth aren't necessarily one area. In fact, between those 4 cities, there's probably 2,000 plus suburbs.
Yeah.
Now, in Sydney, we all know that northern Sydney, the eastern beaches and the southern beaches, as well as the CBD, are the hotspots and the more expensive places. It's the same, the beachside suburbs of Brisbane, Perth, and Melbourne, as well as East Melbourne as well. And if we start to look at a city properly, then we can start to see that there's holes and different stories within a city. Now, one of the big things that I look at is the 10-year performance. If we know that, like you said, the long-term performance, according to Homely, has been very, very strong in these cities, and we can expect that in the future as well, maybe not the same gains, but good gains, then we can go, well, there's parts of Brisbane right now, for example, that have literally doubled in the last 5 years, that have gone up by over 100%. And then there's suburbs just down the road from that have literally gone up 2, maybe 3% per annum. Now, that's why I like to start really, really breaking not just the city, but then into the part of the city that's the cheapest. And then from that, the suburbs within that part that are the most undervalued as well, to increase short-term, medium and long-term performance.
You know, timing is the hardest thing when it comes to property investing and identifying the right market, and some of those little indicators, looking at the 10-year performance, understanding the long-term historic averages in these areas, help us figure out where we should be putting our investment. Now, you stumbled across Phil Anderson's work a number of years ago now, his book, The Secret Life of Real Estate and Banking, where it actually looked at 250 years worth of property data over in the United States. After learning more about this cycle, we understood that it's been running for over 350 years in the United Kingdom, over 150 years here in Australia. And we've actually recorded a video called the 18.6-year real estate cycle explained, which I would highly recommend going and watching so you can understand this. But we've overlaid this cycle here in Australia to figure out which of those metro markets we should be investing in at different stages.
You know, this might sound really, really high level, and there's a lot of people that don't believe in timing, which I get, but after overlaying 50 plus years of data personally, the last real estate cycle we went through, in the first 7 years, prices in Sydney and Melbourne went up by over 100%. And then in the second half of that cycle, prices in Sydney only went up something like 29% and about 66% in Melbourne. In the second half of the previous cycle, prices in Brisbane went up by over 125% and over 130% in Perth and Adelaide. Now, how important is that to know? Because we're now entering the second half of the real estate cycle. And it wasn't just the previous cycle, but it was the one before that and the one before that. And when you start to see these patterns around how money moves, and it's no more difficult than this. Sydney and Melbourne get really bloody expensive. People go, I'm sick of it. I can't create the lifestyle that I want. Where else could I live? Brisbane looks good. It's just up the road. People go to Brizzy or Perth. Prices in Brisbane and Perth go up. And then they go, oh shit, Sydney and Melbourne look cheap. I'm missing all my mates. I'm going back there. And it's the movement of money and population over a 20-year cycle. And when you start to understand this stuff, you can not just choose the right market, which is Australia, but the right state, the right city, the right part of the city. And in future videos, we'll go to the right suburbs. I love this stuff so much because it can be the difference between making, you know, good money in real estate and changing your life over 50 years and making insane money over a 20-year period and completely changing your future.
I love it, man. You know, this is the first part of a 3-part series talking about how to identify the right market. Then we will go into how to identify the right suburb, and we'll go into how to identify the right property, because 2022 represents an amazing buying opportunity in some markets around Australia, and we want you guys to be exposed to it. Now, myself and Ben also run a buyer's agency, Pumped On Property, where we help a small number of clients invest into the Brisbane property market every single month. And we offer everybody out there that's listening to these videos that's thinking about purchasing a property a free one-on-one strategy session with either myself or my brother Ben. Now, during those strategy sessions, what we'll do is we'll talk about where you're at right now. We'll talk about where you want to be in the future, some of the things that may be holding you back, and then we can educate you further on how to identify the right market and how you can develop the right strategy, and you can take that information to go and smash it yourself, or as I said, become one of those paying clients. But either way, we just want the best for you. We want you to make the right decisions. We want you to be investing in the right markets, and we want you to make some really good capital growth as well. So thank you so much for listening, guys. Enjoy your day.